to Market Open Direct Connect, a webinar series for companies to tell their story, why it's compelling and why it's an opportunity to invest. I'm your host, Stuart Walters, and we're joined here today by Neil Young, the Managing Director, and Greg Channon, Chief Geoscientist of Elixir Energy, ASX code EXR. Both Neil and Greg will run through the company's recent news of expansion in the Taroom Trough, and will also participate in a Q&A with attendees. A recording of this webinar will be available on Market Open and Elixir's communication channels within the next 24 hours. And attendees will have the opportunity to ask questions directly to Neil and Greg, of which you can submit through the Q&A tab at the bottom of your screen. I'd like to introduce our guests. Neil, Greg, welcome to Direct Connect, and over to you.
Stuart, thanks a lot for inviting us back onto this forum. Certainly our intent is to use it to explain in a bit more detail the very exciting news that we announced last week regarding the expansion of our already significant operations in the Taroom Trough. We thought this was a fabulous deal commercially and technically, and this forum allows us to talk a bit more about that and also address some Q&A in connection with this. So I'll just go through the presentation. I'll throw over to Greg as appropriate. Then we'll come to the Q&A section. We probably won't have time for everything. This isn't a half an hour session, but we will make it available more generally. And of course, shareholders are free to come to the company and ask questions through our normal website communication, emails, etc. Now, of course, can't promise to answer things that are market sensitive or not already in the market, but that tool does exist. So I'll now get going. Okay, so a number of you have heard me say this before, but I think it's worth reiterating. We're a gas company. Our primary asset focus is on Queensland, and that provides a very strong macro background for what we're seeking to achieve. So firstly, the world desires an energy transition away from dirtier fuels, but that is proving to be very hard. Anybody with any non-sort of partisan belief here has come to the conclusion that gas is not optional and demand will in fact grow. Now, even governments of all stripes are recognizing that, some of them reluctantly, but even the reluctant ones now are recognizing reality. Now, capital markets are following this, and this, of course, is not just an Australian phenomenon, it's a global one, with clearly the impact of various decisions that Washington is making, having their consequences of materiality throughout the world. Now, in Queensland, LNG is relevant. There are export plants, and global LNG is also expected to grow. Australia's security of supply is valued by our allies such as Japan, etc. And also Australian LNG is well placed to supply LNG markets in the Pacific. The events in Washington I mentioned, for instance, over the Panama Canal, for example, might make American gas less competitive in Asian markets than Australian gas. Then in the east coast of Australia itself, the gas supply crisis that many have predicted for some time is now imminent. Current prices are in the region of $14. That's after the government tried to cap prices at $12, but had in effect putting a floor of $12 in the market. LNG imports will start from 2026. That is baked in, and they will put in prices into the market as and when they deliver of more than $20 a gigajoule. Governments are going to need to act, and for instance, we see with the new Queensland government a recognition of the importance of gas and also a recognition that governments will need to support the industry, given the previous government failures that I've alluded to some of thereof. So the Taroom Trough is fabulously well located to meet the challenges that I've outlined. As you can see from the map, the Taroom Trough is very close to Gladstone, where the LNG plants are. It's also connected to the East Coast markets in New South Wales and Victoria in particular, through the pipeline network that goes to Central Australia and then to the southeast. So the Taroom Trough has a multi-TCF potential. There is basically nothing else on the East Coast with similar volumes of gas. Now, gas can be brought in by boat, but as I mentioned, it's expensive. Gas could come in, as you can see from the map, from the Beetaloo Basin, which also has TCF potential, but is a long, long way away and therefore faces significant cost headwinds compared to the Taroom Trough gas, which is actually in the East Coast gas market. Now, value is being unlocked by US tight play technologies. the sort of fracking techniques that Elixir used in its recent well, the horizontal drilling which our neighbours are undertaking and which we and other parties are considering in the future. And there are multiple operators doing multiple different things. And there is an imminent news expected from an ASX company that's our neighbour. Now, Shell is also our neighbour. They say very little about what they're doing, but the media has reported significant flaring from their multi-well program. And what this means is the play is somewhat under the radar because of Shell's discretion, but that is now changing in our view. So we were very, very pleased to recently announce a highly opportunistic and value accretive deal that we did with Santos. This significantly expands our footprint in the Taroom Trough in some really fabulous locations. Now we can see in the map here, the green is the acreage which Elixir already held. The light blue permits, ATPs 2056 and 2057, were 100% Santos. Now we're acquiring 50% interest therein through a farming deal with Santos. Now, under that deal, we will operate and drill a vertical well in the northerly block at our cost, and we'll also then in 2026 acquire 200 kilometers of 2D seismic in the southern block number 2057. Now, based on the work that we and others have already done in the region, we have achieved an additional contingent resource booking, independently certified, of around 1.2 TCF equivalent. So the total finding cost here, that is the cost of the farming divided by the amount of resources we get, is less than 1 cent per million cubic feet. And recall that that sort of volume of gas sells for $14 plus. So on a gas resource per share basis, the deal is highly accretive. Now, we needed to raise some funding at the same time as the deal, which meant we needed to issue some new shares. But the amount of shares issued are much, much less than the amount of resources acquired per total number of shares. So highly accretive in that sense. So here's the breakdown in the contingent resource additions. I might ask Greg, our chief geoscientist, just to touch upon the highlights here.
Yes, thanks, Neil. So, look, our resource auditor, ERCE, had a look at these as we were consummating this deal, and we were fortunate to get it wrapped up at the time that we made our announcement. So, basically, we've had a very significant increase, as Neil said, of net around 1.2 trillion cubic feet of gas. That is over 2056. The southern block, which we're also bringing into our portfolio, is I think really not mature yet for a contingent resource, so that would remain prospective. So the lion's share of it does reside in 2056, and the increase is very significant, and I think is an excellent add-on to what we already have in this play.
Thanks, Greg. Greg, I might also get you to talk here on various technical aspects of what the new acreage addition adds in terms of depth and in terms of targets that some of our neighbours are prosecuting.
Yeah, certainly, Neil. So this block 2056 is to the northwest of 2044 and takes us along strike and up dip. So in terms of the basin-centered gas play, a good part of 2056 is very similar in terms of its depth and in the style of play we have. But however, we do go significantly up dip into the northwest corner, where you see in particular the Laurel 3 proposed well is planned. Now that well is probably in terms of the whole BCG setting, almost 1 kilometre shallower than it is in 2044. So we're getting the benefit of a shallower reservoir. That means it's not quite as deep to get to, but there's also a very significant addition, and that is the presence of what we've termed in the industry the dunk sand. Now, going back about 10 years ago, Shell and QGC identified the dunk sand when they drilled dunk number 1, which is covered by a very small postage stamp 3D, pretty much right over where you see the dunk 1 well. And that sand did flow at stabilized rates stimulated back in the day. And we are of the view that that is exactly what is being prosecuted by Shell at the current time. Now, that sand is seems to be of very high quality and ideal for horizontal drilling. And our understanding is that they've had some significant flows through that, and that it represents an additional target or a sweet spot in addition to the traditional BCG play that we've been exploring in 2044.
So, Greg, on the map here, we also point to the Omega Canyon 1 well, which, for those listeners who don't know, is about to be stimulated and flowed within the next month. Now, just commenting that this is an unconventional play. The play doesn't stop at licensed borders. So, does the target of that well extend into our acreage?
Yeah, look, absolutely. We see the basin-centered gas play extending over, well, pretty much all of the blue that you see there, and a good deal of the green as well. And the basin-centered gas play, as we define it, is quite ubiquitous. It's obviously unconventional, and the rocks are broadly homogeneous, with the exception of sweet spots, which we see like at the Laurel Sand and at the Dunk Sand. And so I think at the Canyon wells, the Daydream wells and the Dunk wells, all really the same play, although each of them targeting a very specialized sweet spot in their own specific area. But look, generally, the results from drilling at Canyon 1 seem consistent with what we've all seen in this region.
Thanks, Greg. So I might just get you to keep talking here, Greg, if I'm not passing too much on you. But maybe for the benefit of the viewers of this, can you just talk on the key points on this seismic map here?
Yeah, certainly, Neil. And so, look, this is a seismic line that's been extracted from the open file Overston 3D, and on it is projected the Laurel 3 well, which we'll be drilling approximately 10 kilometres to the north. So just to be clear, this seismic is the Overston 3D, and the well that we're drilling is approximately 10 kilometres to the north, but in this direct location. Now, on here, I've marked the top of the Kianga Formation and pretty much the base of the Back Creek. So that is the entire extent of the gross interval that we're exploring, which is this tight gas play. And then within that, you can see very clearly a pinch out on the seismic of a sand, which we believe to be the Dunk Sand. Now, we are able to tie that to the open file Dunk number 1 well. And I can say that on the seismic that we have, which is proprietary to our block to the north in 2056, that seismic character is identical. So we feel very strongly that the Dunk Sand sweet spot extends that 10 kilometres north into our block. And so that will be the target of our first Laurel 3 well. I think we'll drill a vertical well in the first instance, because we do have to use, if you like, a pilot well to understand the exact depth of all these formations and sands. Of course, they're on only 2D information in the block to the north. And so once we've got our vertical well data, then we can contemplate perhaps sidetracking and doing a horizontal well into the Dunk Sand, if it does indeed present itself as it has in the block to the south.
Thanks, Greg. So the Laurel 3 well is an appraisal well. It's not an exploration well, given the data that's already present in this region. And it has multiple objectives for Elixir. Firstly, through the Farmin deal, it allows us to earn equity in the license through us paying for that well and then doing the seismic in the southern block in due course. Now, we have a proven track record of obtaining R&D tax credits for the work that we've done on Daydream 2, and we will extend that program to Laurel 3. There are certain aspects of the well design which will be innovative to ensure that occurs, and that means that the government generously helps us out on nearly half of the costs of the well. The second objective is to access this shallower play that Greg's just been describing, and which has seemed to have gone very, very well for the neighbouring operator to the immediate south. There's also generally here a correlation between depth and liquids, and at the shallower depth, based on what we have been hearing, there is a potential for very significantly increased condensate per well. Now, that really, really helps economics, and that's certainly going to be a key objective for us to measure, even in the vertical part of the well, to take measurements on that to the extent that we can. What this play also gives us is closer proximity to the Wallumbilla gas hub. That means lower gathering system costs, and also in a development case, the opportunity to integrate a development with the neighbour to the south, who is being very active here. And as Greg mentioned, the objective of the vertical well is to allow for the optimal placing of the subsequent horizontal lateral. We've seen our neighbours do that to the east, and we seek to replicate that here too. So the contingent resource growth since Elixir came into the Taroom Trough a bit less than 3 years ago has been very significant. You can just see the step up here with now a final position of more than 3 trillion cubic feet equivalent of resources. That's an enormous number for a junior. We can certainly point to valuation metrics compared to peers, which indicates how low cost Elixir is at present. We will pursue, or are pursuing just now, the conversion of our existing 100% licenses, 2044 and part of 2077, to be potential commercial areas. That's a retention lease under Queensland law, which allows us to hold acreage for a 15-year period without significant commitments, although of course we do plan to do work on them. And we see that when the work is done on 2056, that a similar process can be followed. So a very large acreage position will be held. Based on our numbers, more than 500,000 acres to be held. And if I put that into the sort of American context, whereby large players hold acreage positions, that is very, very significant. I'll just touch on this briefly. In the Diona subblock to the southwest, we plan a conventional shallow well later this year. We're well advanced in negotiations to farm that out and look forward to advising the market on more of that in the weeks to come. So here's the activity for 2025. Now, we're doing lots of things, but we're also doing it in a context where the market and others are doing lots of things. So we really get a leverage of both internal and external there. This year we'll drill 2 wells, as we indicated. The Laurel 3 likely later in the year, hopefully at the end of Q3, really subject to obtaining all the necessary approvals, which we're well advanced in, and ordering the long lead items and securing the right rig, again, which we have commenced that process. Hopefully a little bit before the Diona 1 farm out well to be fully carried by a third party. It's a bit shallower, a bit easier to get a rig. That should be before. Now, externally, we've spoken earlier about the imminent testing from our neighbour Amiga, and we very much look forward to that. And then later this year, we understand that Shell will return to a multi-well program. Of course, they don't tell the world much about what they're doing, but we'll be keeping our eyes on that for sure. And of course, in the background, Elixir's always said that this play needs and deserves and will get a large farm-in. Those processes aren't quick, but we are more and more confident with the activity of others as well as ourselves that those parties will come in. So in summary, the world needs a lot more gas. LNG markets will call upon that from Queensland. What will also call upon Queensland is the East Coast, which has an imminent gas supply crisis, and that's going to really hit home politically as well as in market contexts. The Taroom Trough has massive advantages in supplying these markets, and that's increasingly being recognised. And that recognition is displayed through hundreds of millions of dollars being spent by multiple operators. The unconventional plays here are being unlocked, and many achievements have already occurred. And this Santos deal gives us the largest position in the play, as I said, more than 500,000 acres, and access to different play types, including the shallower, hopefully more liquids-rich Dunk play. So that's it in terms of presentation. Really, I think over to Stuart to start fielding some questions.
Thanks, Neil. Thanks, Greg. Fantastic presentation, as always, and extremely insightful. We have had a series of questions come in, so we will get onto those. Firstly, and I know you've touched on it a little bit, but can you break down the key terms of the Santos Farmin deal and what it means for Elixir's future operations in the Taroom Trough?
So in oil and gas and resources, farm-in deals are a very common way of striking partnerships. Here we pay for a certain defined amount of work in exchange for earning 50% of the blocks. We operate that work because it's at our expense, but after the work is finished, operatorship reverts to Santos. The work in the northern block is a vertical well. The work in the southern block is 200 Ks of 2D seismic. So it's a very, very standard way in doing business. It's tax effective on multiple fronts, and no, we believe it's delivering a lot for both us and Santos.
What factors led to Santos joining as a partner, and how does their involvement de-risk the project for Elixir and its shareholders?
So Santos came to us late last year indicating that at a corporate level, they didn't really want to allocate capital towards this project at this point, but they still wanted to stay in the play. And they appreciated what we'd been doing immediately nearby. And that work that we'd been doing meant that we were in very good standing with the Queensland regulator. That allowed us and Santos to approach that regulator to seek a slight extension of the exploration program period, which was secured. And that meant we entered the deal that we've described. From Santos's point of view, it means it doesn't need to spend money at a time where it's allocating capital to very large development projects, but it does keep in the play. It gets carried by a junior, but still has a pretty good position there. Now, our view is to go back to what I said earlier about this play needs and deserves large partners. Santos is a large partner, and we're delighted to be working with them. Our team knows them pretty well. We see that they, as one of the operators of one of the Queensland LNG ventures, now can play a significant role in the Taroom going forward.
How does this deal impact Elixir's working interest across ATP 2056, 2057, and what changes should investors expect in terms of operatorship going forward?
Okay, so it gives us 50% in each of those two new permits. It remains untouched 100% interest in our 2044 and 2077s. So we can still, got perfect freedom to bring in whoever we like into those plays. Operatorship, as I described, it's us initially and then it's Santos afterwards.
With the recent resource upgrade following the deal, what are the immediate exploration and appraisal plans for the remainder of 25?
So the key focuses for this year are to drill the Farmin well, the REL3, and gather the data for that, set up for the lateral to be put into that later. That will probably fall into the next year. The Diona-1 farm out well, the shallow conventional one, will occur this year. And of course, as and when we secure the large partners that we are talking about, then we're already creating options about drilling more wells to gather more data in 100% owned positions. But that will really depend upon the pace and the objectives of those farm out discussions.
Neil, the deal includes a commitment to a 200 kilometre 2D seismic program. What is the objective of the seismic work, and how does it tie into the future drilling decisions?
So as Greg noted earlier, Shell have drilled wells on 3D seismic in their block. So the southern block doesn't have a lot of seismic, so 2D is a place to start. But one interesting thing to note is that we understand that Shell might consider a significant expansion of its 3D seismic. And if they did that, then it would make sense for us and Santos to consider joining in that program and potentially extending it outside the current Shell borders and into the borders of our licenses, which really will depend upon the de-risking that we see from our own wells and the wells of others through the course of this year.
Beyond RL3, what are the other wells planned for 25, 26, and how will they contribute to proving up the resource base?
I suppose every new well will be contingent upon the results that we see not only from our wells, but from our neighbours as well. So in 2025, the firm wells are the RL3 and the Diona farm out well. The non-firm wells will really depend upon the results of those and the partnering discussions. And then moving into 2026, Again, the pace of development here will really be based upon what we've learned to date, but there'll be enormous options available to us and our potential partners to drill more wells, to acquire more seismic, and to put us and the Taroom Trough in total on the pathway to development, potentially serving smaller customers first, but then really having the optionality to build up deliveries to meet greater market needs on the East Coast and in the LNG plants.
With the additional contingent resource gain from the deal, how does this position Elixir in terms of progressing towards a commercial development decision?
Well, certainly this gives us an enormous resource base of the 3 TCF that we've described. And one of the key points there is that to bring in the large partners that we, as I say, we need and deserve, those people want large resources. They don't play around in small and medium resources. So we tick a fundamental box that is required for those deals to take place. So that resource booking is very important in that sense.
On the Taroom depth map, Elixir's holdings in the center of the basin in blue are much deeper than the surrounding wells in the green. Does this increase in well depth increase the well costs and therefore commercial rate required for Elixir?
I'll maybe get Greg to just contribute a little bit on that one, if you don't mind, Greg.
Yeah, certainly. Look, controlling the center of the basin does mean that the wells will be slightly deeper. As I mentioned before, the difference between the Larelle 3 well and the Daydream 2 well is approximately 1 kilometre. Now, that 1 kilometre takes about another 3 or 4 days to drill based on our experience previously, and would have a minor increase in cost associated with that. Of course, because we're in an overpressured area, conversely, we get increased pressure as we go with depth. So look, I'd have to say it's pretty much a sort of a flat even, although there might be a fraction more increase and therefore a fraction more increase in flow required, but it's not significant.
And Greg, I just add to that, we have seen in the Northern Territory recently some of our peers drill really deep wells in terms of their total depth of 6,000 meters plus, using equipment that's been sourced from America. There's a rig in from Texas working on that, which has performed incredibly well, even only after a handful of wells. And the history in America is that as you start to drill, productivity goes up, costs come down, laterals get longer, depth gets deeper. And so we don't see that the depth here is an issue. And as Greg says, it can provide significant benefits. And I'd also just add as well, in Daydream 2, you will recall that at the bottom, we found a free-flowing zone never encountered before. Now that could extend significantly or not. We don't know. But what we will see is that in the years and decades to come, a lot of work's going to go into this, and that could extend down dip and be an enormously productive part of the overall Taroom Trough.
Will Diona 1 be drilled by another ASX listed play?
So that's our intent. Now, of course, no deal is done until it's done. So I will give that caveat. But it's a sort of well that suits a junior partner. It's relatively shallow, relatively low cost. It's a conventional target, so it's not nearly as large in size as the pervasive unconventional play that persists in Project Grandes, but its economics per well are better. That's the key differentiating point between conventional and unconventional. So it's really horses for courses there. We're pretty confident we'll be able to give an announcement on this and then drill that well later this year. And we look forward to advising the market on that, hopefully fairly soon.
Is there any forecast price on what it costs to drill Diona?
Diona's a shallower well to just a bit beyond 2,000 meters. So without being too specific, it's an order of magnitude cheaper than Daydream 2.
And lastly, the one that's come in, and it's slightly off track from around Mongolia. What is the carrying value of Mongolian assets, and what is the plan for those assets?
So the carrying value is in our accounts, and we'll have our half-year accounts out shortly. It's about a bit north of 30 million Australian dollars carrying value. Now, of course, accounting values are pretty meaningless when it comes to exploration plays. They're really just a record of historical cost. What we plan for Mongolia, as we flagged for some years, is to potentially sell down our position there. As we see here, the potential of the Taroom Trough is enormous, and it's more value adding for our shareholders to allocate our sparse capital and resources to that play preferentially over Mongolia at this point.
Neil, Greg, thank you so much for taking part in that Q&A and also for the presentation earlier. Some fantastic information, extremely informative, and yeah, really appreciate you taking part in the Q&A. Some great questions come in from attendees, so thank you for sending those through too. For more information about Elixir Energy, you can head to the company website, elixirenergy.com.au, or you can follow the company's social media channels as well. As I mentioned earlier, a recording of this webinar will be available on both Market Open and Elixir's platforms within the next 24 hours. Gentlemen, thank you so much for taking part in today's webinar. Keep up the great work, and we look forward to chatting again soon.
Thanks, Stuart, and thanks, attendees.